There were some big events this week that caused me to make changes in the portfolio for both Texas Instruments as well as Archer Daniels Midland. I want to walk through what those changes were and why I made them. So let's get started. Hey guys, I am really glad you decided to join me today. This is Kevin Burgess back again with another video. Today I want to share some exciting news around what happened with Texas Instruments this week, as well as a big event regarding Archer Daniels Midland Company and why I chose to make moves in the portfolio regarding both of these stocks. So what this channel is about digging deep. It's about trying to figure out what's going on with the stocks, with the companies, and then how to apply that to our portfolios. You know, I'm not a personal finance professional. However, I've spent a career in the boardroom, in senior management, understanding how the machine works. I've been in the financial reporting area. I've been in the internal audit area. I've been in the corporate risk area. So taking all of that and putting it together, I think I have a pretty decent understanding of how businesses operate. So I want to apply that to my portfolio, and especially this week, Texas Instruments and Archer Daniels Midland Company. As always, what I do in my portfolio does not mean that's what you should do in yours. I'm merely sharing with you what I've done, why I've done it, and I hope it's helpful to you. That's why I'm sharing it here on YouTube. Now, the information I'm going to share with you was shared at the time with the members of this channel. The members of this channel are the ones who support this channel. They support the work that we do. They appreciate what we're putting into our YouTube videos. If you want to look at becoming a member and helping support this channel, I'll share with you at the end of the video how to do that. But without further ado, let's get into Texas Instruments. Now, I clipped out some of the, I thought, pertinent information for Texas Instruments out of their earnings call this week. First of all, their inventories continue to climb. This was their 2022 information versus 2023. Their inventories went from about $2.8 billion to about almost $4 billion. Their long-term debt went from about $8.2 billion to about $10.6 billion. Their cash flows decreased from about $8.7 billion to $6.4 billion, and their capital expenditures increased from about $2.8 billion to about $5.1 billion. So the challenge here with Texas Instruments is that their inventories are going up, their long-term debt is going up, their cash flow is coming down, and their capital investments are going up. That creates a challenging environment for any company. So here's some additional thoughts. Texas Instruments is preparing for the other side of the economic cycle. Inventories will likely be higher for quite some time. Also, they're planning to invest about $30 billion in 300 millimeter technology. With decreasing cash flows, that's going to drive debt even higher. Inventories, debt, and capital expenditures are higher while operating cash flow is lower. We've already pointed that out. Industrial and auto demand, which is about 72 to 74% of their business, may continue to be weaker in 2024. Investments in the 300 millimeter technology may not be online in the near term, so they'll be investing money without getting a return for it. Morningstar has Texas Instruments at a fair value of about $146. Now, Texas Instruments is investing for the long term. So one of the things I like about the management team at Texas Instruments is they are not looking at quarter by quarter. They are looking into the future. They are positioning the company for the future. And so I wanted to point that out as really a good sign from the management team. So what are the takeaways? Takeaways are that Texas Instruments is positioning itself for the long term with potential impact on the short term. The industrial and auto base, which is about 74% of their business, is struggling in this economy. Texas Instruments is investing in the future in the middle of an economic decline for its customers. So here are the salient points about what moves I made in the portfolio. First of all, Morningstar says it's a $146 stock. At the time I put this together, the price was $171. Our portfolio overall average basis was $169. Secondly, their industrial and auto base may continue to struggle in 2024 and maybe even beyond. There's a $30 billion investment that is going to be made in 300 millimeter technology that will drive up debt in the short term and also drain cash. And at the time I put this together, Texas Instruments was 3.25% of the portfolio. That's a little bit north of normal weight for me. Normal weight's around 2.5%. So what did I do? I sold 150 shares of Texas Instruments at around 170.77. So now Texas Instruments is about 1.4% of the portfolio. And just so you know, Texas Instruments actually ended the week at about $164. So I sold at 170.77. They closed out the week at $164.09. So I'm really happy that I unloaded those shares. I did keep about 113 shares or so. And the reason I did that is I believe in the long-term value of Texas Instruments. I want to have some exposure to them over time. I do believe that at some point in the future, they will rebound, and I may not be able to time that. So I wanted to have some exposure to them so that as time rolls on, I'll still have a small piece of the portfolio in Texas Instruments. It helps me to keep an eye on it and see where they're headed, but also not so big that it drives the portfolio value one way or the other here in the short term. Okay, so that's what happened in the portfolio this week for Texas Instruments. Let's take a look at Archer Daniels Midland Company. So let me just kind of read the news to you about Archer Daniels Midland. They said Sunday that it placed its CFO on administrative leave pending an investigation into certain accounting practices and procedures related to the company's nutrition segment in response to a document request by the SEC. So they've appointed a gentleman as a interim CFO. As a result of the announcement, ADM says it expects to delay its quarter 4 earnings release, as well as the filing of its annual report on Form 10-K for 2023. The company also is withdrawing guidance for the nutrition unit and now expects to deliver above $6.90 in adjusted earnings for fiscal year 2023, after previously forecasting full year profits above $7. Okay, so that's the news. Now let's look at the takeaways so that we can then kind of work through what I decided to do in my portfolio for Archer Daniels Midland. So here's some key points. First, the consensus estimate was $7.27 per share. Now, consensus estimates were based on what the analysts were saying. However, the company said that it would be above $7. Now, the company is saying it's above $6.90. So the company has actually moved the forecast down from above $7 to above $6.90. However, analysts were expecting it to be at $7.27, so it's about a 37-cent move from what analysts were expecting. You can see here that nutrition, which seems to be the part of the company that's up in question, nutrition is this blue bar, and it appears to be about 10%, maybe a little bit more of the company. It's 700 million of the 6.6 billion in operating profit. Next, there's new guidance that was above 690, so the potential impact is 37 cents per share. If we take that 37 cents per share, multiply it by, let's say, a price earnings ratio of 10, we're looking at maybe a $3.70 per share impact on the stock just from the profit moving. However, the stock was down in one day over $15 per share. So you can see here on this chart, in 1 month's time, the stock is down 28%, but it dropped significantly on the one day after the announcement was made about the CFO. The issue seems to be focused on the nutrition segment, which is this 10% or 12% or whatever that works out to be. Now, the company has reported after this that they expect to issue their 10-K, which is their annual report, to the SEC by the end of February. So this kind of puts a time frame for the investigation to occur and then for them to actually make corrections and report. to the SEC. The company raised its dividend on January 26th, which was after this announcement, by 11%. That tells me cash is looking okay, and the board of directors believe that the future is looking bright for ADM, but they do have current uncertainty. Now, I'm not going to go through all the details with you, but just so you know, given a low payout ratio, a low net debt to equity percentage, decent return on invested capital, a narrow scope for this issue, which is the nutrition segment, and the board of directors raising the dividend, I chose to add ADM to the wealth circuit portfolio. I did not have a position in ADM prior, but I do now. So for the week, I've added 450 shares of ADM at an average price of $53.60. I do want to tell you again that just because I have invested in ADM does not mean that you should invest in ADM. There is risk here. The risk is that they could have some really bad financial numbers, and it could be as bad as what the market's anticipating. I, on the other hand, don't believe it is that bad. I really like what I see from the management team and from the board of directors. They have taken this issue by the horns. They've not tried to hide it. They have done, I believe, the right thing to try to get to the bottom of it. Let's, wipe everything clean and let's go figure out what's going on, make decisions, report the new 10K, revise any financial statements that have been issued in the past, and get this issue behind us and move forward. I like that approach from the ADM board as well as management team. So I'm believing that this is not a systemic issue at ADM. It is an event, and we need to deal with that event, but I'm not thinking it's systemic in the company. Now, as I mentioned earlier, this information I send out to the members of my channel, and it's really a thank you for those who are helping to support this channel. And I want to share with you how you can become a member of this channel as well. I use a platform called Buy Me a Coffee. I will put the QR code on the screen somewhere over in this area so you can get all the details associated with it. We have two more members in the inspiration tier of our supporters. One is NK, who's also Gnome. And we also have Billy, who has joined as a supporting member of this channel. Also, we have a collaboration team members, SCHQN and Clayton Maherg, have begun supporting this channel in a big way. I want to say a big thank you to these guys for joining us. But if you want to become a part of this collaborative community, the first thing you can do, and this is free of charge, you can join the Wealth Circuit Investing Discord server. It is absolutely free to join. There is a link in the comments below. We now have over 40 members, and we have excellent collaboration inside this Discord server. The next thing you can do is become an inspiration member. And that inspiration member, it's a $3 a month fee. But basically, you get access to these book review videos that I'm doing, where I'll read books that are inspirational for investors and put together a video as a review of that book so that you can actually watch a video or listen to a video about the book. And if you decide to read it, then you can go further, but at least it gives you a sense for what the major themes of the book are and whether it's something that you might be interested in or not. The second thing is I give you a shout out on a future video, just like I did with these four today. You also get access to special channels within the Discord server. And then here's the really key points for this inspiration tier. First of all, you get to see my investing portfolio on a weekly basis. I post it out on these special Discord channels. I also share the portfolio's performance on a weekly basis. And then any investing trades that I make, I let you guys know before I make them inside this inspiration channel in the Discord. Next, if you wanted to join in a bigger way, you can become a part of the collaboration tier. Now, this collaboration tier is everything in the inspiration tier, plus you get additional Discord server channels. And we are currently working through how to get this group together on, let's say, a Zoom call where we actually talk about issues that we want to talk about or stocks that we want to actually research. And then lastly, this is the group that got access to the research that I did on Texas Instruments as well as ADM, plus other companies this week that reported earnings. And I got some really good feedback on that. So, for the members of the Wealth Circuit investing community, I want to thank you from the bottom of my heart. You inspire me more than you realize, more than you know. And I am glad you're here. These videos, all of this work is really for you. But I want to tell you that I really enjoy the collaboration. I enjoy the camaraderie. And I look forward every morning when I wake up to having conversations in the Discord about what we're doing, what's going on in the market. And so, if you want to join that, feel free. Okay, guys, that wraps it up. I'm super glad that you were here today, and I will see you on the next video.